Today we will analyze why Airbus stock is outpacing the aviation sector and is flying higher for longer than competitors like Boeing or Embraer, and how Airbus is setting the bar high to stay ahead of the curve. In 1975, Boeing held a market share of over 80% in the commercial aircraft sector, but in the late 1990s it began to shrink significantly. Airbus first surpassed Boeing in the early 2000s, both holding around 50% of the market share. Today Airbus holds 56%, while Boeing is at 40%, Embraer is at 3%, and Comac at 1% are catching up. So how did Airbus manage this enormous catch up, and what strategies do they follow to foster dominance? First, the aviation market can be segmented into the commercial aviation sector, with players as Airbus, Boeing and Embraer delivering airplanes like the A321 or the Boeing 747. Second, the military aircraft sector, in which Airbus, Boeing and other companies such as Lockheed Martin play an important role. And third, a new and growing market is UAV, short for unmanned aerial vehicles, such as drones from Airbus, Kratos Defense and DJI. Currently, the largest segment in terms of revenue is the commercial aviation, with an astonishing $168 billion in 2025. Meanwhile, the UAV sector, with $20 billion in 2023, is experiencing rapid growth. To give you a glimpse into the numbers, Airbus delivered 766 commercial airplanes in 2024 for an average selling price of $105 million. This marks a stunning $80 billion in total commercial aircraft revenue from their top sellers such as the A321 or the A350. With their state-of-the-art commercial aircraft, Airbus can handle the demand for low-cost, high-efficiency, low-maintenance and future-proof versatile airplanes. So what is Airbus doing differently that their stock is outpacing competitors like Boeing? In recent years, a shift in the aviation sector has happened as more and more airlines abandoned large quad jets. These are planes with 4 engines, such as the Boeing 747 or the A380. Instead, customers were demanding fuel-efficient planes capable of long-range flights while being versatile. Achieving this set of customer requests, Airbus focused on so-called twin jets, which have just 2 engines but are still capable of long-haul flights like from Frankfurt to Los Angeles, Singapore or even Auckland. Just a single decade ago, such trips demanded a quad jet such as the A380, but it's no surprise that the A380 is less efficient than the A350. To better understand Airbus dominance, let's compare these two types of aircraft in more detail. The A380 has a maximum capacity of 853 passengers in an all-economy layout, while a typical 4-class layout, it seats about 545 passengers. The A350-1000 can carry up to 480 passengers with 40 premium and 440 economy seats. Of course, the A380 can offer multiple amenities that the A350 can't provide due to its size. Take for instance Embraer's stunning layout for its super premium first-class cabin. The passenger has a private shower and can even connect to other guests at the bar. All these incredible services cannot be provided in an A350, which often has a first-class cabin, but it's less comfy than the A380. Next up, we have fuel efficiency, where the A350 is the clear winner, with up to twice the fuel efficiency of the A380 for the same payload. This study showed that the A350 is nearly twice as efficient as the A380, as the authors concluded using over 2,700 flights. This resulted in a so-called fuel efficiency index. For a 20-ton payload, the A380 has a fuel efficiency index of 1.4, while the A350 has an efficiency of 0.7, resulting in a ratio of 2. Airbus has ambitious future R&D plans, and they could take their A350-1000 and A321XLR to the next level. Airbus Project RISE, short for Revolutionary Innovation for Sustainable Engines, focuses on redesigning the aircraft's engine. As of today, nearly all commercial aircrafts use jet engines. But this wasn't the case before the 1960s and 70s, when piston engines were used. In 1958, Boeing manufactured the first 707 with jet engines. Later in 1972, Airbus' first plane, the A300, which was also equipped with jet engines. So what exactly does Airbus plan for the future? The general idea is to combine the piston engine with a jet engine. This leads to a new so-called open-fan engine, which is expected to be more fuel efficient than today's jet engines. Airbus not only delivers more planes, but its ambitions are high to improve its fleet continuously. They offer a stunning A321neo family, which is super fuel efficient and versatile, as the A321 extra long range, or short XLR, can fly from Frankfurt to New York. Boeing, on the other hand, had multiple technical issues. Most recently, a door dropped out during flying. The faith in one of Boeing's most important models, the 737, was shrinking, which is the direct competitor to the A320 and the A321 family. Additionally, the 7 787 Dreamliner faced multiple regulatory issues from the FAA, while major strikes hit Boeing's production targets. To give you a perspective, we can have a look at the numbers of airplanes Airbus and Boeing delivered. This is crucial because the aircraft are only paid for after delivery. Boeing delivered 480 airplanes in 2022, 528 in 2023, and 348 in 2024. So yes, Boeing's deliveries dropped by 36%, which is a significant dent in Boeing's history. Airbus, on the other hand, holds its streak by delivering 661 planes in 2022, 735 in 2023, and 766 in 2024, which was a slight growth of 4.5% from 2023 to 2024. When comparing these two major aviation champions, the last 3 years should be considered for analyzing their respective EPS, short for earnings per share. Since Boeing is losing money, its EPS is negative $8.30 for 2022, negative $3.67 for 2023, and negative $18.36 for 2024. Meanwhile, Airbus never made a loss, but its EPS slightly dropped from $5.77 in 2022 to $5.30 in 2023, and finally to $5.54 in 2024. Since Boeing's EPS is negative, it's not suitable to calculate the earnings per share for an average of their last 3 years, as it would result in a negative EPS. And for Airbus, we can use the average of the last 3 years EPS, which is $5.54. With a stock price of $205.31, we come to a lofty PE ratio of 37.4, way above the S&P 500's average PE ratio of 29, and Europe's stock 600 of 19. While two dogs fight for a bone, a third runs away with it. And the third dog can be upcoming companies like Embraer, a Brazilian-based aircraft manufacturer which challenges Airbus and Boeing with smaller aircraft with up to 146 passengers like the A220 or the Boeing 737 MAX 7. Especially Embraer's deliveries of 206 are remarkable compared to Boeing's 348 deliveries, though Embraer focuses on smaller executive jets. Meanwhile, Boeing is 17 times bigger than Embraer in market cap. Embraer's stock is reasonably valued as it managed to break even in 2023 with a 3-year average EPS of 60 cents, resulting in a lofty 3-year average PE ratio of 97. However, it was an important milestone for Embraer to break even, and therefore their last year's PE ratio of 27 is more important than the 3 years average one. The PE ratio of 27 is calculated by only using the last year's EPS of $1.92. Resulting in a less expensive stock than Airbus or the average of the iShares US Aerospace and Defense ETF of 70. Even though Embraer's stock had an incredible run the past 3 years with jaw-dropping returns, we should focus on the actual results and the outlook, as well as fair PE ratios, which are typical above 30 at the moment. Speaking of upcoming companies, we can see a typical hype with UAV stocks, which stands for Unmanned Aerial Vehicle, whether it be Kratos Defense, AeroVironment, or Drone Shield. All had incredible performances. If you find yourself in a fear of missing out feeling now, hear me out. Since these types of stocks aren't suitable for defensive and long-term investors, their volatility is undeniably high. Take for instance Drone Shield's 1-year volatility of 89%, meaning the stock fluctuated on average between 89% positive and 89% negative in just 1 year. Such a volatility is tough to handle in defensive investors, as they tend to be more emotional. For reference, Airbus volatility sits at 27%, Boeing's at 38%, and Embraer's at 44%, where the average S&P 500's volatility is at 20%. The established airplane manufacturers also play a significant role in the UAV segment by cooperating with others. Airbus, for example, cooperates with a startup called Quantum Systems from Munich, Germany, to foster its UAV segment. We think that at current levels, Airbus seems quite expensive. To justify a PE ratio of 34, they must either increase their airplanes' output further or grow drastically within the drone segment. As we are defensive long-term investors, Airbus either needs to earn more or the stock price has to drop in the range of $134 to $150. For Boeing, the future is on the ice, but if you're a value investor with at least 10 to 20 years, it can be seen as a good buying opportunity, especially since tariffs seem to play in good faith for Boeing. And lastly, Embraer seems to be the perfect fit in between. A PE ratio of 27 is lofty, but the outlook is bright, especially if its earnings are above break even and increase steadily. Now you know not only why Airbus is ahead of its time, but you can decide whether Airbus, Boeing's or Embraer stock is worth buying. Thanks for watching and see you in the next one.